So today we're going to take a look at the much requested stock of PayPal. PayPal is down 11%, nearly 12% since Monday after it brought its earnings out. And actually from 2021 when it hit an all-time high of around about $300, which has put the stock down nearly 79% since that time frame. Has this stock been justified to have this drop in the last year and in the last 5 days? Or is this a big overreaction like what we've seen in some of the other big techs recently? The likes of Google when ChatGPT came out and that saw the stock go down to $89 and has since recovered that dip by 30%, or the likes of Meta since that time frame when Apple changes started happening and increased competition with TikTok, and that was seen as an overreaction and the stock did rally from here. So is this a stock that deserves to be down this much, or is this an overreaction after the earnings? Let's take a look at PayPal. And for full transparency, I did become a shareholder in PayPal recently. So PayPal, if we look at the front of the numbers here, you can see there was non-GAAP EPS beat of, well, they came in at $1.17 and that beat by 0.07. So there was a beat on the EPS there. Revenue growth of 8.3% year over year, and that beat by 50 million. So you can see here from the top and bottom numbers, there was no surprises here. There is no issue and there was good numbers here. Now, let's look at what the negatives have been pointed out about this company. So the first negative that has been seen is that this revenue growth has been seen as weak revenue growth at 8.3%. Now, in my opinion, I am surprised to see people call this weak growth. In fact, I think when you look at the valuation of PayPal, which very quickly, let's just stare at the valuation of PayPal right now. On forward multiples, the total enterprise value to revenue is currently a 2. Historically, it's a 9. And if we look at total enterprise value to EBITDA, it's normally around the 30 range, and it was, or currently is, a 9. Normalized earnings is normally around 20 to 30, and it's now at a 12, and free cash flow is normally around the 20-30, and it's down at the 12 once again. So you can see it is trading below historic metrics. You've got to think here, okay, has this got to a point where it's too low? Now, getting back to the issue on the growth, a lot of people have pointed that the growth is the issue here. Now, when you look at PayPal, and let's remind ourselves it's trading at around 12 times forward earnings, let's compare that to some of the other big tech out there. So Meta, that's trading at 29 times earnings, just put in 2.7% year over year growth. And we know there's a few issues out here, but I'm just putting this into context, this 8% growth at 12 forward times earnings. If you look at Apple is currently trading at 29 times earnings. Let's have a look at their growth. It's currently negative 0.25% year over year. Let's look at another FANG stock. The earnings is currently 35. Netflix currently offers 3.7% year over year growth. Google, currently trading at 25 times earnings, is currently growing at 2.6% year over year. So the fact that people are saying this is weak growth for a company trading at 12 times forward earnings, I just don't buy that for a reason of PayPal being a bad stock or a negative on these earnings. In fact, I would say 8% year over year growth is very, very good in this macro environment. I would like it to be maybe a little bit higher, but it's still not terrible when you look at the valuation. Now, the next thing is people have said, well, the growth is not as good as other fintech platforms. And I agree. If you look at the likes of SoFi, if you look at the likes of Visa, if you look at the likes of Adyen, a lot of their growth is a lot quicker than PayPal currently. But the thing, once again, is you've got to realize, what does PayPal trade at? It trades at 12 times forward earnings. You look at SoFi, there's no earnings ratio that we can use. You look at Visa, I think Visa's currently high 30s. If you look at Adyen, for example, they're currently trading at 77 times earnings. So granted, it is not growing as big as some other fintech platforms. However, it's not valued like them fintech platforms. And I think that's what a few people do need to potentially realize with PayPal if you're looking at it as an opportunity. The next thing is non-GAAP EPS is now expected to grow 20% compared to $4.95, up from the prior guidance of 18%. So they even hiked up their EPS, and this was probably the reason why the shares was actually up when the earnings came out. You can see here there was actually a positive reaction on the day before the stock went down. That is very good to see them hiking up the EPS. We know what has been the change of PayPal in the last few quarters is they're now going to focus a lot more on that that growth of the profit and efficiency. So the fact that the EPS is getting hiked up is very good to see, and they are focused on getting more money out of the more mature and big spender accounts rather than attracting new accounts onto the platform. Now going on to what could be viewed as one of the negatives, Q2 revenue is now expected to grow 6.5% to 7% on a spot basis and 7.5% to 8% on an FX basis, but non-GAAP EPS is expected to grow 24% to 26%, and that was pretty much in line with consensus. So the revenue growth here is roughly what was expected. However, like I said, we do want the growth to be a little bit higher, and granted, this is actually one of the things that I would say that overall PayPal could have been a little bit better on, is stronger guidance in Q2 of higher growth. But when you look at the growth here, this is still not too bad growth, especially when you look at the valuation and you look at the metrics and you compare that to potentially other FANG stocks out there. So that was one thing that I potentially would like to see get better, but it wasn't terrible. Now in the quarter, PayPal did offer operating cash flow of 1.2 billion and free cash flow of 1 billion. They are using the majority of this free cash flow to buy back a lot of shares. So you can see here that they are expected to reach 4 billion in share buybacks. So they are rewarding a lot of shareholders with them buybacks, which is very good. And like we said earlier, when you look at free cash flow at the moment, if you look at the future basis, free cash flow is currently around 12 times, which is very far below the multiples of what it has previously been before. And if you look here, operating margin was up 14.2% from 11%, which is really good. Now, one thing, net income was a lot higher, as you can see here, but one big thing that did affect them is their effective tax rate. Their effective tax rate did go from 26% from 19.1%, which did hurt them slightly. Now, one of the next negatives that has been used for probably PayPal's reason to drop is that active accounts only grew 1% year over year, and this is viewed as that PayPal has currently stagnated. Now, it does look like PayPal has stagnated here, but if you do follow PayPal or have done your research on PayPal correctly, you will realize that PayPal did make a business change, which we spoke about last year, which was to not focus on attracting new accounts on their platform. It was to get their current users to use the platform more and more and make money out their current users. And as you can see here, when you look at total payment volume, it grew 10% and 12% on an FX neutral basis. And that is more of the key metric to be using with PayPal right now. And as you can see here, them trying to get more money and not spend money on attracting new users has led them to be more efficient and hike up that EPS guidance, which is what we wanted to see. Now, one of the next negatives I have seen used on this business is around the CEO and the CEO change that will happen inside the company. Now, when you look at the CEO, a few people have said that Dan Schulman has done a bad job at PayPal. Now, I remember PayPal before the whole CV situation, so we're only going back now 3 years ago, and I remember during the 2018-2019, the running on the share price that PayPal had as it separated away from eBay, and people said that it's very good for PayPal to move away from eBay, because PayPal has been held back by eBay and it's a fantastic business. And people were saying how good of a business it is before the CV situation and how it has been held back. Now, during the CV situation, obviously it did very well from the e-commerce boom, and also when you look financially, the company has had a very good track record. You can see here the company went from 10 billion and 1.4 billion in revenue to the peak of nearly 5 billion in revenue and 22 billion in revenue. So I don't know how someone can come around and say the CEO has done a bad job, because only before the CV situation everybody was raving about this company. During the CV situation, everybody was raving about this company, and I've got to say that it did get to very elevated metrics, which it was going to have its reality check, but the problem is has it now got sold off too low? But the main issue is I don't believe when people say he has done a bad job at the company that is true, because you look at the past performance, it has done absolutely amazing. And people say that there's not much confidence in the management team here. Well, when you do look at the insider buying, if there is no confidence here, why has the exiting CEO just around February time bought 26,000 shares of the company? That's 2 million in shares. that's not bad for a company that's in turmoil and a CEO that doesn't apparently believe in his business and hasn't done a good job. The next thing is gross margins. So gross margins did take a bit of a dip, and I agree that you do not want to see gross margins take a dip. So I do justify that as a negative inside the company. But when you do look inside the company, why is the company moving down on the gross margins? A lot of people have put this down to potentially competition. Realistically, the reason why is because of some of its unbranded products like Braintree have been growing rapidly. Now, its unbranded products has less of a better gross margin, or doesn't command as good as a gross margin with it being an unbranded product. And with that offering 30% growth, which people say that PayPal is a dead company and don't appreciate other parts of the business like Venmo and Braintree just came off 30% growth. So if that is growing rapidly, then that will have some impact on your gross margins. Now, PayPal did go on to address that and how they will get that back up in the conference call, which you can go listen to. But going back to the point where people question the future of growth of PayPal, well, when you look at the unbranded products, they are growing absolutely rapid. And also when you look at the other parts of the business like buy now, pay later, which the total payment volume grew 70%, and Venmo still being very strong, you can see here there's still very good key drivers for the growth of PayPal going forward. And ultimately, what you're left with these earnings on PayPal is going, everyone can agree PayPal at $300 was ridiculously overvalued. The ultimate question is now is that, okay, we've had the correction, but have we now corrected too far? At $64, is PayPal now way too sold off? When you look at these earnings, okay, there was a couple of things that could have been better in relation to the Q2 revenue growth could be a little bit stronger, but ultimately, are you still picking up a very stable blue chip company that's not going to go anywhere in the next 5-10 years and still has growth drivers going forward? At 8% growth going forward, EPS now growing 20%, buying back 4 billion shares, and with a lot of the metrics far below their historic levels, you've got to go, okay, this company that is maybe not growing as fast as what it used to do, but is still offering good growth, good profit growth, good revenue growth, share buybacks. At $64, should this be a stock that you buy the opportunity as it has been oversold? Or do you look at this and go, actually, it deserves to be sold this low and it is a fair valuation at the moment? That's the ultimate question that you have to work out. Obviously, as you guys know, I am a shareholder of PayPal, and at the moment, I think the valuation is very good when you look at the numbers they're currently doing. There is a few things that could be slightly better for PayPal, and they have a few things they could be improving, but ultimately, when you look at the metrics, do the metrics and the valuation justify that? And is there opportunity there is the ultimate question. And that's what you've got to realise if you want to be a buyer or if it's one you want to avoid. That's the video for today talking about PayPal, guys. Hope you enjoyed it. See you later.